The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 43. NASDAQ is flat. S&Ps are down 5. We have the gold contract trading up by $6.20 at $11.65. Silver's up by 19 cents at $17.17 an ounce. We have copper flat, $2.60. Oil's down a buck at $52.90. Notes. 10-year note up 13.6, 124.10. 30-year bond up a full 0.4 149.30. You can expect a lot of movement in these notes and bonds out here today. And King Dollar down 252 ticks, 100.85. The euro's at $1.06. The yen is at 114.96. And make sure that you get your seatbelt on today, folks, because we are going to be having some rocking and rolling coming up to 2 o'clock.
2 o'clock will be here soon.
Telling you, man.
Fed day it is.
Fed day it is. And guess what? When you talk about seatbelts, folks, you want to understand options upside down. Well, guess what? 12 to 1 Eastern Standard Time every trading day right here at TFNN. We have swim lessons. We have our man, Mr. Kevin Hinks, Scott Connor, walking you through defined risk trades. It's a beautiful thing. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy.
Hey, this is it.
Finally. It's what we've been talking about and guiding towards and managing the expectations since mid-September.
There's no doubt. You know it's going to be wild, Kevin? I'm trying to figure out how Yellen and the crowd, though, have managed our expectations. You know what I mean?
Well, they have, her soldiers, all the members of the Fed, have been out talking for weeks now.
Yes.
Right up till the quiet period started. And they've all basically said the same thing, right?
Yeah.
And they're not saying anything that we don't know. I mean, they've been very clear since almost September.
Yes.
Right? So that's not news-making, what they've been saying. What will be news-making is her comments coming out after this meeting.
I know.
Let's face it, that's what we are really all waiting for.
There's no doubt, man. There's no doubt. And, like when we were talking yesterday, even in the morning, it was interesting because what you had is that, there's no doubt you had the market continue going up and you had the VIX going up. So there's plenty of people putting some insurance on, this whole rally.
Right. And it was certainly a late breaker. Right?
Yeah.
That the VIX. I mean, think about it. The VIX was under pressure and depressed until really yesterday.
Yep.
When it kind of started going up and firming up even on the upside. And even though the Dow was up 100, the VIX was firm and on the upside all day. So that was the first time we really saw what appeared to be some risk-off trade. Right? We kept waiting for it.
Right. And that's, there's when we look at that, Kevin, right, there's really no way that we know that, okay, is someone just really buying, calls thinking it's going to go higher, or is someone actually just hedging a portfolio, right? So it's that is a speculation, right, as to what they're doing with it, right?
Yeah, it could be both.
Yeah.
You used to be, when I used to stand in a pit, we used to get a lot of information from order flow, who it was, right?
Okay.
Is it a retail firm trading with me, or is it Goldman, or,
yes,
one of the big firms? It's harder to figure out now, right? Because there's not the same paper trail that there used to be. That said, the action in the order flow is what it is, right? There is trades taking place, and volatility is going up, which implies that there's net buyers of volatility. So yeah, guys are trading and putting in some insurance. That thing you mentioned, right? It's just like buying insurance on your portfolio. You're seeing a lot of it.
No, and it totally makes sense. Imagine you have a large portfolio. You've been doing great. You're coming to the end of the year. It's like, Man, I mean, you'd almost want to go delta neutral if you could, because
exactly.
Yeah, it's like,
why would think about the run that this market has had? Why wouldn't you lock things in here and say, all right, let's let the market make the next move, and I'll react to that. I'm not going to put all my eggs in one basket either way.
No.
You're saying exactly what I used to think going into events like this, Tom, which is get flat. Take the risk off the table and let the market make the first move.
Yeah, no doubt. Because especially anyone moving money, managing money, what happens is that, they're going to get croaked if they were wrong. They've already made so much money. They're not going to get hurt if they don't make the clients more money, because they've made plenty of money. Sure.
Right. Tom, how would you like to be a money manager that has to explain that you rode this market all the way up and then all the way back down and did nothing?
Yeah, right. No,
I wouldn't want to have that meeting.
And have a fee tucked inside it. Yeah.
Yeah, it's even better. Oh, and I'm supposed to get paid for that? Oh,
yeah.
Wait a minute.
No doubt. So what are we going to talk about today, Kevin?
Vega. Day 3 of Greek week. We're having a Greek week this week. We talked about Delta on Monday, Theta decay on yesterday, and today we're talking about Vega, volatility.
You got to love it, man. It's right here, folks, 12 to 1 Eastern Standard Time. Remember, folks, if you're in the West Coast right now, you're in Portland, you're driving down the coast. I know it's early in the morning, but remember, folks, you can jump right on your cell phone, TFNN.com. Just hit Tiger TV, 12 to 1 Eastern Standard Time. Great show. You want to understand options upside down. And great day to kick it off,
That's
man.
for sure.
Yeah, big time.
It's going to be a good ride.
It's going to be a ride, baby. You have a great one, Kevin, a safe one. Look forward to the show at noon.
Have a great day, guys.
Thank you. You and Tommy and I are going to be right back, folks. You stay right there. Dow right now is down 33. Nasdaq's off 1.5. S&P's are down 450. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now down 41. NASDAQ is off 1. You get the S&Ps down 5.5. And Wednesday, so we got oil.
We do.
Oil at 10:30, folks. And if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN. You can hit that banner, bring it up. They'll bring up the exchange. They'll put $25,000 of paper money into your account. You can see how these defined option contracts trade. So we've had quite a bit of movement this morning in the oil market. You know, the things moved around. Let's see. So that chart there looks like it's 52 down to, 51.50, and then we're at 52 again, right?
We're up at 52.50 just overnight, you know.
Oh, okay. I was looking at that's one day. Okay, cool. Okay.
So what I pulled up first was just to take a peek was the daily ones with maybe even some volatility. So right now we're trading at about 52, which is nice. And so they have even $5 ones up and down from 52. So you'd be paying like 40 cents or $40 on each side.
Okay, so I need an 80-cent movement. Yeah.
Getting, you know, the 2 o'clock statement
in that
mix with, you know, maybe. Now, what time is the press conference at? Is it 2 o'clock or is it 2 o'clock?
It's 2. Well, let's see.
That's before. Let's get that detail. If you were going to make this trade with that in consideration, right? You know what I mean?
Right.
But it's just either way, the volatility for the day might make sense. So it's just something to look at, especially because they line up with 52 being right at the pivot point.
Okay.
So you'd be buying one at the $40 and selling one, of course.
Okay, so I need 80.
And that's going to be 80 because you're paying 40 cents on both sides of it, right? But that's until 2:30, and that's 80 with $5 of movement if something crazy.
Yeah, which is pretty cool.
Crazy were to happen.
Okay.
Now going to the one we always usually look at, the 11 a.m.s.
Yep.
That's where, and I glanced at it quick. 52.25 is going to be your opportunity.
Okay.
To do a pivot. Now let's just even jump around. What happens though if you go till noon?
Yeah.
Then we do have 52, but even as we speak, we're now actually 8 pennies off 52. We're pretty close to even 52. Wow, we're 52.05. So let's just look real quick. If we were going to do the 52.25s, so these are the 11 a.m.s. Here's going to be our short one with 52.25 to the bottom.
Yeah.
That's the one that's going to have some intrinsic value in it, like 19 cents. So it's going to be a little bit more expensive.
36. Yeah.
And then to the upside, this is going to be the cheap one.
Okay. 17, 36, 43.
53.
53.
Yeah.
So that's interesting. So we get 80 cents and we get 53.
Yeah, and you know what's important to keep in mind here is that these are only $1.50, so your max value is 150 when you're putting up at that 53.
Okay.
Versus in theory, your max value putting up the 80 is 500.
Wow.
But very seldom are you ever going to get a $5 move in oil before 2:30.
Right.
Let's say realistically you could get, you know, a $2 move or a $2.50 move. Maybe those are outliers still, but they're much more in the realm than $5.
This is a tough one, man.
So let's just jump around and see even where we go
with the noons, right?
With the noons, exactly.
Okay.
Because again, this was 52.25.
Yeah.
You're paying all this intrinsic value down here.
Right.
So going to the 12 o'clocks. Here's our short side.
Yeah. 29. And 33.
Yeah.
So you get, oh, this is interesting. So it's 53, 62, and 80.
Yeah, and that would make sense because, you know, every hour is critical in terms of the 11 a.m.
Right.
You only have 37 minutes until expiration, right?
Okay, so now yeah, I'm sorry, go ahead.
Go ahead. No, just, you know, every hour is critical when you're talking about such short-term vehicles.
Let me just bring up Bloomberg for a second. So if I go CLF6, I'm thinking, whoops, no, look at CLF7. Yes, we are in 2007 here. This is pretty amazing. Ooh, look at that. That's actually gone all the way down. Yeah. See, I think, yeah. 51.66. It hit 51.66. Yeah, I don't think that. This looks to me like that move that already happened. That's the move that I was actually looking for. Do you know what I mean?
Okay.
On the way down.
Sure.
So it's like, okay. USO. Yeah, I think that move took place. If anything, I think that thing will pop just a little.
Okay. Well, we can lay off it then. And it'll be interesting to see if it does react with the Fed.
I know. What I'm trying to figure out is that so my take is that they're going to be dovish. And if they're dovish, that would mean that the dollar goes down. And so you can make the case is that if the dollar's going down, then that's going to help oil.
Sure.
You know? So, now that being said, that move that came down this morning, that's where I was thinking that oil should go anyway to start out with.
Okay.
Because I'm really bearish oil.
Okay.
Well, I think that the break that went topside is a false break. So
Okay.
we'll see.
Sure.
I mean, that's where that kind of shakes out, right?
We have
At
a
this
caller,
point.
I think. Let's go to Janet.
Hey, Janet, how you doing?
Hello, Tom and Tommy.
Good morning.
I'm fine, thank you. I'm trying to stay warm up here. We're having a bit of a cold snap in BC, and it's cold. We're
Well,
not used
stay
to it.
warm, exactly, for sure.
Tom, I just wanted to ask you. I'm in the Nugget right now.
Okay.
And I haven't put a stop in, and I'm wondering, should I wait till after the announcement to put my stop in? I don't want to get stopped out. And I've seen these very long spikes up and down at 11 o'clock. What's 11 o'clock our time, or 1 o'clock your time, I guess. And I've seen those big long spikes, and I don't know what to do. Whether to put it in after or before. And if I put it in before, I was thinking about around $7, because it seems to be...
Well, I'd put it under 760, and I would definitely put it in because, you know, I understand what you're saying, that you can get pushed around pretty heavily here, but I would put that in for sure.
At what price would you put it in at?
I'd put it in under 760.
Under 760.
Yes.
So would 7? Does that sound okay? Or is that too low?
I don't think you have to go that low. You know?
Okay.
I don't. Right now, folks, the Nuggets trading at 8.48, and where I'm going with this is that, you know, you have 760 was the low of yesterday. You know, because if it spikes lower than that, it's like, okay. I'm expecting volatility. I'm expecting that gold's actually going to go up. But if I'm wrong on the deal, gold could get down to $25 in about a heartbeat. Do you know what I mean? Because that's how gold likes to trade. So.
Yes, I hear you. Well, that's good. I'll put it in then, Tom.
Yes, stay right there with us. Stay right there. We're coming right back. Dow right now is down 18. Nasdaq's up 4. S&P's are down 3.5. You stay right there, folks. Tommy and I are coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives.
If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien. We do appreciate you growling and prowling with us out here. Well, the oil numbers just come out. We just went from 52 to 52.70. We're trading at 52.57. And look at that. Now, what I'm saying when I say to Tommy, look at that, crude inventories fell 2.56 million barrels when the report yesterday was that, when we just read that, that was up.
Right? There was a gain, but well, it'd be interesting to see what the median estimate, of course, is. But yeah, it's getting a pop no matter what. But it was up to 52.70, and we'll pull it over and check. But it's pulled back 50% of those gains, 60% of those gains real quickly.
And we needed on 53-cent movement on the 11 o'clock, 62 on the 12, and 80 on the...
And those were varying, though, a little bit, either from 52 or 52.25.
Okay.
Yeah.
Okay. So what's intriguing is that, you know, when we were talking about it had come down, you get the pop up. Most of the movement seems like it had taken place just then.
Yeah, let's just see. I'm really interested, and we'll see it come across with the median estimate, because that's usually the biggest telltale sign.
Exactly. Exactly.
It'll come across at some point. Let's go back. We're talking.
Yeah, we have Janet. So Janet.
Tom.
Okay.
Yes.
Let's go. What I want to do is this. We're going to go, since you're at the Nugget, right? And the Nugget trades off of the GDX.
Yes.
So if we go over to the GDX, right? You know, this little baby, you know, is looking pretty good. It gapped higher this morning.
Is that because of short covering?
No. What happens with what happens inside the gold market in general, you know, like gold and silver are different than equities, meaning on gaps, because they trade all night long. So you can expect that gold and silver are going to gap up and down, and then in correspondence to that, you're going to have the GDX and the XAU gap up and down. Okay, so it's not the same smooth line, right?
Okay.
Okay. So that being said, you know, this has some strength up here. And my point more than anything is when we go back over to the nugget, NUGT, I just don't think you should put the stop, like $1.50 down, because I don't think you have to. That's my point. Do you know what I'm saying?
Okay. Thank you.
I'd put this out here, even 767. You can put it like at 747 or something. That's still a buck down. It's a long way down, but still 47 cents above where you might have wanted to put it.
It's just under Friday's low.
Yeah, that's right. That's where it's getting tucked. And I don't think. Hey, we'll see. There's no doubt, as you said at the beginning of the conversation, you can expect, and I do expect, folks, we might get two movements, which happens in the Fed here. When this digestion is going to come out, it seems like this is going to be a big one. It shouldn't be, because, when we were talking with Kevin and everyone else, the Fed has already told us what they're going to do.
Yeah.
So it shouldn't be a big one, but I think it is a big one because the market has expanded so tremendously. And, if the Fed says that they're going to go up 2 or 3 times this year and the market believes it, that is going to be a huge problem for the market. And in fact, that would be a huge problem for gold also. Gold would tank beyond belief if the market believes that they're going to go up 3 times. You'll see gold go down $50 like about a heartbeat.
Right.
And I'm long, so I don't want it to happen. But that's my perception.
Right. Tom, what effect do you think the Modi is going to have on the gold market in general with his restrictions now for people owning gold? Having said that, I gather that Sharia law has said that they're allowed Muslims to hold gold, and what effect would that have? It's like one balances out the other in my mind. But
well, I don't think Modi. I mean, they're not at the point yet. Modi, folks, is the Prime Minister of India, and he has definitely disrupted India in like 2 seconds by taking all the cash out of 80% of the cash out, 80% of the old cash out of circulation. He hasn't touched gold yet. He touches gold, I think he's going to have a bigger problem on his hands with the society rather than the gold market. Well,
I thought he was restricting ownership of gold, that the female was allowed to own 500 milligrams or whatever it is, males 100, girls 250 or whatever, and otherwise that was jewelry. If it was inherited, they could have. I thought that was already established.
I don't believe so, but I'll Google that right now. And when is your understanding that got established?
Oh, I don't know. Maybe within the week.
Okay. I don't know that.
And what about the Sharia law business? Have you heard about that?
No.
Oh, okay.
That's all right. Tell me about it.
Well, I gather it's a fairly recent statement saying that the Muslims are allowed to own gold.
But they've always been allowed to own gold.
Sharia law, I don't know. I read a thing about Sharia law had either reinforced the fact that they were allowed to own gold or whatever it was made Sharia law.
But
it was in the headlines somewhere that I read it.
Yeah, but I mean they've always been allowed to own gold, so I don't get that at all.
Oh, maybe you could Google that too, Tom.
Yeah, well, that one there I'm quite positive about, okay. Because the difference in that one, okay, has to do with in the Muslim religion they have to actually try to figure out how that they can sell bonds because the Muslims cannot basically get into debt. Okay, so. Inside the Sharia law, what ends up happening is that when they only start selling bonds about 5-6 years ago, and they had to make it such that it wasn't actually debt; it was another thing. So, gold is no debt. So it's just, you see what I'm saying? It's just the opposite. That.
Yes.
Yeah.
One more quick thing, Tom. You say you're expecting the dollar to go down, but if they raise rates as everybody's expecting them to do, would that not strengthen the dollar because of money coming into the U.S. from the third world and Europe?
Well, my take is that that's already happened. That's the dollar just, broke out of consolidation that it's been in for 2.5 years.
Oh.
Yeah.
So what would make it go down with the rates going up?
Well, the rates have already gone up. See, if we look at the rates that the Federal Reserve is talking about, the Federal Reserve only can control short-term rates. So they control a rate from bank to bank. They're going up from 0 to 1/4%, to 1/4 to 1/2%. Well, the market's already gone up 1 full percent in 6 weeks. And, well, in 3 months, we're at 1.5. Now we're at 2.4. So the market has already gone up 4 times the amount that the Federal Reserve is actually going to go up, or at least told us they're going to go up.
Mm-hmm.
So it's already in the market.
That's a big part.
Right.
Yeah, that's a big part of it.
All right. Well, Merry Christmas to you all down there.
Thank you so much.
It's a good one for you, and all the best.
And buckle up for 2 o'clock.
Okay. Thanks for all your programming.
Thank you. Have a great one. Have a safe one. Tommy and I are coming right back, folks. Stay right there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow right now down 26. NASDAQ is up 4. S&Ps are up down 3. And we went over to, we just Googled when we were talking about the ownership of gold. Now, I got to get into this more, but what this is, if you disclose your income and pay taxes, you can still buy as much gold as you want in India. What you can't do is purchase gold, and if you say you have no income, they're saying that, okay, you only can have these quantities of gold.
Sure.
You know, it specifically says the Central Board of Direct Taxes informed that gold purchases are exempted from taxes if it's from disclosed income. Because they have a huge problem. And
Sure,
I suspect that problem is going to continue.
Yeah.
Because then the other side of it is, like, there's been for so long that people haven't paid taxes there. And one of their main, one of the main sources that they're actually going after doctors.
Okay.
Evidently it's a huge deal.
Okay.
Huge transactions, huge cash transactions with real estate.
Yeah.
Okay. So, we'll see where that shakes out. Oil, yeah. So here, let's talk about oil.
Yeah, we're back up to about 52.60. So about 60 cents a movement since we came out.
Yeah.
And it's 10.44 about. So we'll see where that shakes out.
And folks, as we come into 2 o'clock, if you haven't test drove the Nadex platform, great time to do it, because we are going to get movement, quite a bit of movement.
Totally. Indices, commodities, currencies,
yeah,
right?
Right.
Definitely.
No doubt, And of course, don't forget, we got our man, Mr. Basil Chapman, coming up next. And as you come over to TFNN, right on the front page, we have our Tiger Dollar sale, Salvation Army Tiger Dollar sale. Great time to make 25% on your money. In this particular case, you're doing it no matter how much you buy.
Yeah, you get 25% bonus on whatever you purchase. And then aside from that, 10% of whatever you spend is donated in your name. So you spend $600, you get $750 Tiger Dollars. $60 is donated in your name. You spend $1,200, you get $1,500 Tiger Dollars. $300 bonus. $120 is donated in your name. And same thing, you spend $1,800, you get 25% bonus, so you get $450 bonus Tiger Dollars. $2,250 is what you end up with, and $180 gets donated to the Salvation Army in your name. So that's going to run a week from tomorrow.
It's hard to believe.
That's it, and then Christmas is here, man, because that's that'll be Thursday the 22nd. Friday we'll kind of wrap it up, and Friday's going to be a slow day anyway. Of course. Right. Everybody should be home, relaxing, watching some Tiger TV, not working or doing anything.
No, totally.
And probably not even trading, right?
Right. No, that's right. And not even trading. And that is great advice. Okay,
Yeah.
because the bottom line is the markets are way too slow, and they'll just fluctuate back and forth. And guess what? It's time for a
Christmas
break.
Eve before a 3-day weekend.
Yeah, because you know what? I think between Christmas and New Year's, everyone's going to take a 4-day, Friday to Monday. Right? Why not?
Who's doing real work on, just like the market, there's not going to be trading. Who's doing real work at the end of that Friday, let alone the beginning?
Totally.
Yeah.
If we do go over here, I want to show you, let's see how I set up. So I set this up this morning. Let's see how this is doing. I went into the euro.
Okay. Long the euro, short
I went long.
the dollar.
I went long the euro. Right. Coming in this morning. Now this is one of these high volatility trades again. Well. I paid 20 ticks in premium, which was higher than normal, but that would be expected with the Fed Reserve announcement today.
Sure.
You know what I mean?
Yes.
But the amount of the spread is pretty cool, man. This is a big spread.
Yeah, so let's look. I believe it's $250, which is the 250 ticks.
Right.
Yeah. So right now, it's trading at 106.55.
Yeah.
And 106.30 is the floor. So every tick above 630, 655, we're about 25 ticks above the floor. But then, of course, there's going to be some premium in there, right?
Yes. There's still, let's see, there's still...
I was just putting, that's where... So, if you got in it right now, you'd be risking $42 or $43 to make the 207.
Right.
And that's where, about from 630 to 658, now there's about $28 of intrinsic value, about $15 in premium. And that's not bad. The premium's still in there.
No, it is, and it went down a little. I was doing. I think it was lower when I got it. Not lower. The price was lower, but I think I risked $37.
That would make sense. Just that it
like
was,
$2.50.
Even we'll look. It was about 904. So let's take a peek where it was trading at about 904.
You'll see there's a small pullback. I bought a small pullback.
Yep. This final bar is the 9 o'clock bar here. So
Yeah.
right about here.
Right. So
it's a pretty good entry.
Yeah.
In terms of, right
No,
here.
listen, I was lucky. I was sitting there, and folks, what you want to do with all of these, and it's hard to do. Like I was bullish biased, and I didn't want to put it on too early last night because I really wanted to feel the market, and then it was already up, and I'm saying to myself, oh man, I don't want to buy it when it's already up. So I just sat there for a while as I was doing the newsletters, and sure enough, the trading gods came back and gave me a little pullback.
because you were looking at it
Right there,
up here,
exactly.
and it dropped down like
Right.
a penny, which is 10 ticks because it trades in
which is a lot,
thousands.
in the foreign currency market.
Definitely.
If we do go over and we take a look, so what I do like out here, this bond market, folks, is saying that looks to me like they want to go higher. And watch, I'll show it. So TYH7, and what we had, that's a nice buy right there, and that was at that's at 8:30. So you get a nice buy at 8:30 coming in. Big contracts. That's 80,000 contracts.
Yeah.
And then we got a little follow through here, but I like those price spreads because that's definitely not you and I, man.
Sure.
that's a big number. You
Sure.
know what I mean?
Definitely.
Now the correlation of that, and this is what I did. I took that correlation, then went back over to the dollar to make sure that someone's selling the dollar. Because what I try to do is say, okay, you had the first sell at 2. Oh, this is pretty intense.
Overnight, yeah.
What's this happening here? This is good. So you had the big sell at 02:30 this morning, and then you had the next one, and the next one was 8:30. It was the same deal. Now it's interesting here. This is interesting because this is trying to break out the low right now, which is we're right at it, 100.770. Yeah, so that thing breaks the low before Janet Yellen. Oh, that's going to be a tough one. I better break it with volume. I don't want to see that break with light volume.
There's probably going to be some decent volume today.
Yeah.
Across the board.
Right, but you know what I mean? If break with light volume, then it's going to go the opposite way. It's like, oh, no,
Just
man.
intraday. Sure.
Yeah, exactly. So let's go into, we had the NDX breakout yesterday. Inside the NDX out here today, we have Akamai's the leader, up 4.8%. NVIDIA's up 3.8%. Fox, 20th Century Fox is up 2.5%. JD.com. Express Scripts is getting smoked. That's down 5.5%. Expedia is down 2.1%. You stay right there, folks. Tommy and I are coming right back. Dow Industrials right now are down 38. NASDAQ is flat. S&Ps are down 5. We're going to be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is down 37. You get the NASDAQ flat. S&Ps are off 5. And I guess as we come up to 2 o'clock, too, we'll probably calm down a bit, right?
Yeah, that would make sense.
Yeah.
Especially leading right up to it, right?
Yeah.
Just glancing back at oil, see
Yes.
where we're ending up.
So 52.63.
Yeah. I mean, not bad movement.
No.
Kind of in the realm of where it was priced. So would have been bordering around break even so far, regardless of where we chose. Now, if we go out to 12 o'clock or 2:30, who knows where it's at by then, right?
Right. Now, what's going to be interesting here is that, let's see, the 2 to 3, 1 to 3. So what will happen here, folks, if you want to test drive the Nadex platform, is that this afternoon, the announcement's at 2.
Sure.
They do have spreads 1 to 3.
Yeah, definitely.
Yeah. So
in everything, right?
Right.
Yeah.
Right. So that would be the spread to go.
Sure.
Yeah. Playing both sides of it. I'm going to have to look at that when we come up to that, because
Okay.
I think today is definitely going to be a big day.
Yeah.
In that aspect.
Yeah.
You know.
What are you going to be looking at? Like what?
I'd be looking at the NDX 100.
Okay.
And the reason is that that's the last one that took so long to break out. And, you know, the breakout's a good breakout. There's no two ways about that. You know, so particularly with the spread, it'll be pretty cool because, okay, if it's going to go, it's going to go. If it's
Sure.
going to croak, it's going to croak. It's
Sure.
like, you know, we're right. So I think the volatility would be heavier. Right.
Yeah.
You know, and I guess
Today's might be a good day to do it. We'll see what the premium is, right?
Exactly.
Yeah.
Exactly. So when you do
It's
that,
going to be more expensive than most days.
It
but
is.
Will it be too expensive? That's what you say.
I know.
Right. Yeah.
You know, and what happens, folks, is that you just, as Tommy and I do this, you just add up both sides of it, and that's the type of movement that you need.
Sure.
Okay?
Yep.
And as long as you get that, more than that movement, well, you'll make money on one side of it. At the close.
That's right.
At the close.
Yeah.
At the 3 o'clock.
Or you
close.
trade out one side, maybe you swing back.
Yeah.
From the other
And-
side. We haven't really had one of those yet on the show. But
no, we haven't. We haven't.
We'll have one if we keep trading those numbers.
No, well, and you know.
That's when you really need a big surprise.
You do.
You know, because then you get a huge spike in one direction, followed by a reversal or a pullback or
Right.
something like that.
The market thinks one thing, and then all of a sudden they, oh no.
Exactly.
Right?
Exactly. No, exactly.
Yeah.
I mean, kind of, you know, that would. I'm sure you could have been trading the euro when the ECB came out.
Oh my God.
Because that would have been.
That was it.
You're trading both sides. You get the pop.
Yep.
You sell the upside one, and then you just free roll the negative side one, and guess what? It turns around and tanks.
Yeah, and it did it.
Yeah.
And it did it in a big way.
Yeah.
If we go into the Dow to see what is moving inside the Dow Industrials out here, Apple's the mover. Apple's up 0.5%. You get Cisco up 0.4. Pfizer's up 0.4. I want to go back over the NDX. Oh, I know. I want to go to the IBB for a second. So the IBB, it looks like it's been setting up a large ABC down. Yeah, it's interesting. So it's flat out here today. Because the IBB is going to affect the composite for sure. And I think it was Express Scripts that was the big mover in here today. Yeah. So Express Scripts is the pharmaceutical company that fills prescriptions all for big pension funds, for big health units. Yeah, that's off the highs with some nothing heavy. It's been consolidating for a while. Looks like that can hit 54 right now. You're at 69. And trading wise, folks, we got we got until really the Tiger dollar sale. And guess what? That's almost going to be.
And even then, that's Thursday,
that's
right?
Thursday.
In terms of it's going to taper, to use that term today.
Taper.
Good term.
Oh, baby. Here we go. You stay right there, folks. And man, Mr. Basil Chapman's coming up next. Of course, then swim lessons, Steve Rhodes, Dave White. Dave White's going to be on at 2 o'clock. Don't miss that, folks.
That'll be a good hour.
I'll be back. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.